Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told. Futures contracts never fold, in profits we behold. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide, gas and metal, side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick, every day, watch the numbers sway and sway. Broker screens, they light the night, every tick a gamble right. In this game we found the light, trading life, our appetite. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide, gas and metal, side by side, where fortunes often collide. Bulls and bears, we ride the tide. Candlesticks, can't hide, gas and metal, side by side, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide, gas and metal, side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick, every day, watch the numbers sway and sway. Rubber screens, they light the night, every tick a gamble right. In this game we found the light, trading light, our appetite. Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told.
Hello, everyone. Welcome to the stream. Welcome to Paul as well. Hello, mate. How you going?
That music doesn't come to a conclusion. I'm sipping my coffee. I'm not thinking it's just going to go live, and then all of a sudden it just stops. We've got to put an end on that. Come on.
Yeah. It's not a good song. It's an original AI song, which is now outdated, so it needs to be
Original AI
improved.
song, right?
Yeah, one of those early versions. So quite interesting. So welcome to everyone in the chat. There's quite a lot of folks in here already, and some questions. So I guess we'll answer some of them as we go through by the virtue of what we're talking about. I've got some notes up here which we can talk about too, but we're going to have a question and answer session right at the end of this session, and that will be for members only. So this is a members only session, but we've made it open to the public for today, just to try out this new service or system on YouTube. So basically the format is, we're going to be talking about stuff now on the charts. We'll look at oil, we'll look at natural gas, metals, crypto, stocks, commodities, all that sort of thing. And then after about half an hour, we'll switch over to a private session with members, so that members can delve right into some of the questions that they might have, specific questions for which they have paid for the answers. So we'll get to that. So that's the kind of format, unless I've got it slightly wrong, Paul, because you did set up the software and I'm not.
No, we're honestly,
100%.
we're just experimenting. So I think maybe we'll back off from questions in the first half. just unless there's something precedent like, oh my, there's a tsunami coming, is that going to hurt me? You know, we'll deal with that, of course. But if maybe then we'll try questions later. So obviously just give us some feedback. We'll just get into the charts. We'll have a look at what's happening today, FOMC and all that. And then we'll switch to members and then we'll answer some questions and we'll just see how that works. We don't usually do this public, so hopefully no one's a little bit peeved off by that, and we'll see how it goes. But hi, everyone, anyway. Thank you for joining us all.
Yeah, welcome to you, Paul. And so, folks, what you'll see on your screen right here is a set of notes which I put together, which I normally do for Sunday Night Live, but I put some notes up for today just to guide us through what's going on. The major thing is, of course, we've got the FOMC rates announcement coming up shortly in a couple of hours' time, 2 o'clock New York. And whilst we expect that the rates will be held as they are, I think Polymarket's got an 80% chance of, maybe it's 90, 95, I think, actually. I think it went up last night, of no cut at all. So we don't expect a rate cut. But what we do expect is some info from Jerome Powell regarding what 2026 might hold in terms of the way the Fed's thinking. And of course, Jerome Powell won't be around for all that much longer. So he might even talk about his departure and his follower. So I put some notes together, and I'm going to read the headlines to you, but I will make these notes, as usual, available to private members in the private group, and the PDF will be put up there straight after here, so you can read through this in your own time. But I'm going to read the headlines. The macro regime that ties everything together is it's a currency market cycle. A lot of folks are asking why Bitcoin and other assets have been behaving differently to each other. We've seen gold and silver reaching pretty much all-time highs again today. We just shorted gold and silver, by the way. And moving up dramatically, exponentially. Stocks moving up quite neatly. Nasdaq step by step. The S&P a little bit more aggressively. But Bitcoin and the altcoins right down at the bottom, along with some of the other commodities, interestingly, some of the softs and grains. So we're seeing differentials in the way assets are performing, and a lot of it is related to currency market cycles, and this big cycle that we may be in now of debasing fiat currencies, moving into digital currencies like Bitcoin and stable coins and all that sort of thing, other altcoins, and metals and other things that might be of more value. So that's the kind of thing, moving out of fiat currencies into assets in a sentence. And the Fed is boxed in because as we do that, there's going to be currency devaluation, which leads to inflation. And the Fed has to manage inflation, their dual mandate, inflation and jobs. Job losses have been creeping up, although there was some sign of hope last week. But prior to that, we saw the job market getting eroded, but inflation not quite getting down to the 2% level. So, we've got unemployment rising, inflation not at target. I think the Fed's abandoned the 2% target anyway. I think it's more like 3% and below will be fine. I don't think we're going to get down to 2% very easily, if at all. I saw also on, I'm going to ramble on for a bit, Paul, if you don't mind, just to get through these notes, then we can switch across the charts. Another couple of minutes. But I saw on Trueflation, I put this up in the private group too, they have declared that the real inflation rate, actually, I put it up on X this morning, is only 1%, 1.15%. I don't believe that number either. I don't think it's 2.5. I don't think it's 1.5. I think it's more like 3 or 4 or 5.5. But, that's just me. And it depends on how you measure it and what you choose to leave out and put in. Anyway, so the Fed might be boxed in. That's the only point. And we've got this problem with currency devaluation. And economic news, the big news is obviously the Fed announcement today. US data, jobs-related prints. We've got jobs coming up later in the week. And then this Friday will be, hang on, what's tomorrow? Is it going to be the first Friday of the month? Is it, Paul? For the non-farm payrolls report post Friday. What is the date on Friday? 31st.
It's the 30th on Friday.
30th, yeah. So we won't get the NFP this week, but we will get the Thursday jobs numbers and maybe the JOLTS and ADP jobs numbers. So this is the dance that the Fed's dancing. We'll talk more about this probably as we go through, and I will speak about this a lot more on Sunday in Sunday Night Live. So cross asset risk appetite. I'm sorry about the noise coming from my phone.
Let me have a go at that. Hang on, that's just difficult. Cross asset risk appetite. Oh my God, that's difficult.
There we go. That's better. Thank you, Paul. What today's tape is reading. So gold at record highs. Is it going to continue? I doubt it. And we've seen dollar weakness now. A surge in dollar weakness, a 3 to 4 to 5. I can't remember the number. % drop in the last week. And as a result of that, risk assets have naturally gone up in price. So not necessarily because of the asset itself. This is a problem, this noise. I do apologize. I hope you can't hear it too much. It's a camera, which I installed yesterday, being security conscious, and it sends an alert. It's an AI camera. So dollar weakness flowing into other assets. Is this rally in Bitcoin the last week or so as a result of dollar weakness or Bitcoin strength? I think it might be dollar weakness and not Bitcoin strength. Same we might say about oil and gold and silver and all the other stuff that's been rallying. Is that because of dollar weakness, or is it because of the inherent strength of those assets? We'll have a look at that in a minute. In some cases, it's asset strength. In other cases, I think it's just dollar weakness. And I think that might be the case in Bitcoin's case too. We saw Bitcoin rallying this last week by about the same amount that the dollar depreciated against assets. So Bitcoin did not rally. The price of assets rose because the dollar price dropped. So keep that in mind. And also, if you look at the volume chart on your Bitcoin chart right now, the bottom volume graph on your daily chart, we're going to have a look at it. You'll see that volume has dropped off to almost zero. So yesterday and the day before, we had rallies on Bitcoin, but with no volume. And that's because that rally was not real. It was a dollar devaluation-based rally. Part of the reason, anyway. Right, stocks. Now, we're long on stocks across the board, so we'll look at those very carefully. Some of the sectors that you might be interested in are financials, yet again, although we did see some sell-off in some of the banking names. Defense and aerospace, of course, and we don't have a lot of exposure to this, but I'm looking at names like Palantir, more like the AI sort of large language model security related to defense is a good one. But then we must look at things like British Aerospace, for example, on that side. We must look at Northrop and we must look at a whole host of other aerospace companies. I'm not going to try and name them all now because I've forgotten.
No. Name them all right now. Every single one.
Northrop Grumman. All right. What else? BA, Boeing, and a few others. General Electric. I think these are all good names, by the way. They're coming to mind as I speak. And there are a few. I'm not in any of those. I'm more of a NASDAQ trader. And so I'll be looking at some of the tech names aligned with defense and aerospace. And then, of course, AI, computing infrastructure, a bubble, maybe, but bubbles take some time to burst. Bubble rubber is incredibly elastic. This is the problem that retail traders get into, thinking the bubble's going to pop, not realizing that these bubbles are more like exercise balls. The thickness of the rubber is incredibly thick. And so you've got to put a lot of pressure into those bubbles to burst them. And I think that's the sort of bubble we're in. JP Morgan's another good name that you might look at in terms of banking. But we'll talk about crypto, tokenization of equities. I mentioned this last week, and I'm not going to talk about it too much. Maybe Paul would like to talk about this at some point. Putting equities on the blockchain. There are all sorts of good reasons to do so, and a couple of reasons why it's not a good idea, because we'd be working a lot harder and many more hours, which we don't really want. And then commodities. We must look at gold and silver, of course. Are they going to top? We're at extreme Fibonacci extension levels on both gold and silver, and of course, completely blown out on all the oscillators. And that's it. So I'm going to leave the rest of this in the members group. There's quite a lot to go through, and there are some links and details in there which I think will be incredibly useful for you. And now that I've done all that, maybe we can have a look at crypto, Paul, or shall we start with the other sectors? I've just got to get my chart set up.
Yeah, let's jump in let's look at the other sectors. I got a live stream on this tomorrow. But I mean, can you just, you mentioned about the that you think the Fed has abandoned the 2%. Let me put that up for you. The 2% inflation. Why do you think that is? Why do you think they're backing away from that? Is it because they simply can't reach it?
Yeah, I think that the problem is that there's just more and more money being printed. Debt can't be paid off. We've got $37 trillion debt, which has to be serviced by fake money, printed money. There's no money to pay that off. And so the more money that gets printed, the more inflation rises. And that's basically it. And I think that's where we are. I don't think there's a possibility of paying that debt back. I've just got to try and find my charts. So I'm talking too much. Let me get them up on here quickly. So I think that's the reason.
It's an interesting slippery slope, though, when you keep moving the goalposts in terms of what you consider economically stable. And having lived in countries which have serious inflation problems, like not the UK, but but others, it's like you just see it as like you need to back away from the edge, people. Just reestablish what you want to see, and it's very interesting how I don't agree with I think the Fed, controversial. I think they're relatively incompetent in the job they're doing. They don't really address the complexities of inflation at all. They essentially just keep picking up a hammer, and that's my perspective. I mean, what's your thoughts on that view? I mean, do you think they're a little bit simplistic in their approach?
Yeah, for sure. I mean, there's a lot that goes on behind the scenes that we don't really talk about too much in terms of money supply and bonds, and the Fed gets its fingers into a variety of different parts of the economy where they're allowed to. But yeah, I think that I think it's basically, as Jerome Powell always says, exactly what you've just said. They have a blunt instrument, and that is the rates. You're talking about that aspect of their work. It's a blunt instrument, so you raise rates, so you kill the economy, but and jobs, but you bring down inflation. Or you drop rates, you improve the economy and jobs, but increase inflation. And that's always in balance. Inflation basically runs at the same pace as the stock market does. So whatever asset price you see go, the overall market, not just the stock market, but the markets in general, as those rise up every year, year after year after year, that is the inflation. Some of it is growth through real productivity growth and stuff that's actually happening, getting stuff out of the ground and making things out of it. So that brings some growth, but quite a lot of it is just currency devaluation. And I think that's what we saw today, this week, in fact. This whole week, we saw assets rising as the dollar dropped. We can put the dollar index chart on here. There it is there. And as the dollar moved down like that, there it is there. It's clear as daylight. Through support, I'm going to have to hedge this dollar long because I'm long on the dollar. Actually, I'm not convinced this is going to carry on moving down. But and that's another story. But this big move down in the dollar, we moved down from 99 down to 95, 4% drop. And we saw Bitcoin rallying by 4%. And we saw everything rallying. But 4% of that was just currency devaluation. So anything above 4% was good. Anything below 4% was just
for me. It's
not
like
good.
I think for me, I mean, this is coming from an everyman perspective, not so much as a trader, but it's what I see when we look at capitalist leaning societies, right? And when I say leaning, I mean it's taking the weight. We look at with the cause of obviously recent inflation, the pandemic, and all of these different things. You see corporate profits going through the roof, right? The stock market being relatively resilient, whereas everyday people are suffering tremendously. And I think that is the symptom which underscores that blunt instrument the Fed is using, because ultimately you would like to see the Fed, not just in the United States, but of course, whatever in monetary stabilization institution is around the world, in the EU and wherever, right? You would like to see them addressing all of the issues together to make sure that no one is kind of left behind, because ultimately we talk about bubbles. It is the formation of these bubbles, you could argue, also comes from we talk about elastic then. It's the disparity between the reality of everyday people's living environment, the cost of living, all these kind of things, with the stock market and how well it's doing. And that's ultimately what you can, and we just see the elastic stretching. And at some point it's got to break. Whereas if it's less of a blunt instrument dealing with inflation, you can rein in some of these corporate profits, stop the terrible economic headwinds which face regular people, and it just balances things out, which I suppose from my point of view, it's quite a progressive point of view, I imagine. It's just that's the way I see it. So, but either way, if we want to avoid a bubble, we do need the Fed to be doing a little bit better in terms of their approach. And it does maybe require a bit of innovation and development in terms of its role. And the irony is that if President Trump is trying to reimagine the Fed in a different way, let's just put it that way, then maybe it's not necessarily a bad thing, as long as we can keep politics out of it, because it maybe needs a little bit more tea. So it's a very interesting time to be alive. But we don't want bubbles, because bubbles scare people, and we just want stable, organic price action consistently over time, not up and down. I mean, that's my thought. I don't know how everyone else. Leave a comment. Let me know if you think I'm stupid.
Yeah, let us know in the chat. I just want to give a special shout out to the trading crew And shout out to the Trading Cruise channel on YouTube too. Andre is a good friend of mine. He has a fantastic channel. He's also got a fantastic marketing company, which he's the CEO of. And I know Andre very well. Just a shout out to him, and go and check out his channel, The Trading Crew. And he's got some interesting insights on options and some of the markets that we trade too. So it's nice to see you, Andre. I haven't seen you for ages, years maybe. So it's great to see you. All right, folks, let's look at natural gas. Actually, let me just, before I do that, there are a couple of things I want to talk about here. First of all, on this page, you'll see a number of instruments, and right at the top, you'll see Bitcoin, silver, natural gas, and NASDAQ. These four along the top. I hope you can, not sure if it is showing on the screen. So NASDAQ, Bitcoin, silver, natural gas. Those are my four main plays at the moment. These are the things that I'm most interested in, and the things that I'm hoping to make the most money on in the next few weeks and months. So it's NASDAQ, Bitcoin, silver, natural gas. The rest of it, I'm busy trading as well, but we have limited time today. And so I'm going to try and focus on those things. And of course, we need to talk about Bitcoin. And I'm probably going to leave that towards the end. And then we can segue into Crypto Paul's ideas on Bitcoin, which I'm sure you'd like to hear more about than my own views on Bitcoin. So having said all of that, I'm going to start with natural gas. Now, I'm hedged on natural gas. We've got long at the bottom there. Very, very simple. We've got a big rollover gap in the middle, right above us. We've got a weekend gap below that, which we filled. So that's done. We have another weekend gap down further down here. I did a long video on this on the weekend and also on Monday. So I'm going to encourage you to go and have a look at that. There is no time for me to go into all the details and the nuances of this trade. But I will tell you this, that we got long at the bottom there, and I got long again on the retrace to the 100-period moving average and on the gap close. There's the gap. That's a weekend roll gap. And we got long before the weekend. It rallied up. And I got long again on the dip back down to the breakout point, the 100-period moving average and the bottom of the gap. And then on the last 4-hour candle, before this one that we're currently in at the moment, that's this one, that's the current candle. On the last 4-hour candle, we broke down below that support level, and I hedged the position immediately. That's how I trade these markets, particularly natural gas, because it's so volatile, so dangerous, and so difficult to trade unless you keep control on your risk. These things, because it's cents, it's also psychologically a bit of a weird mind setup, because if the price moves 5 cents, you think, well, it's 5 cents, no big deal. But 5 cents on a $2 contract is a big deal. And you need to be aware that's 2.5%. So, 5 cents can be a massive move in terms of percentage. We get deceived by the size of the relative size of the number in terms of percentage. Anyway, getting back to this, that's why I hedged, because I don't hold losing trades on natural gas. Never. I don't add. I do occasionally DCA in, but to a limited extent. And if the market goes against me, I immediately hedge the position, and that's where I am now. So I've got 2 long positions and 1 short position, equivalent to the size of the 2 longs, which I took the 2 longs, one at the bottom, one at the retest of the gap, and then I hedge. This last candle is now bouncing out. We're still below the 20, the 200, and the 50-period moving averages. We're now above the 100-period moving average. That's this black line that seems to be horizontal, but it's not. It's a 100-period moving average. We've also formed a bullish engulfing candle, breaking above that previous top and the hedge level and the 100-period moving average. If this candle, and it's going to close in 10 minutes time, so it's not, the timing's not great, because I'm going to actually take a trade and I'm going to get long on this candle close in 11 minutes time at the top of the hour, when this 4-hour candle rolls over into the next candle. And that will be a bullish engulfing candle. I may wait, however, and maybe the timing is not going to be a problem. I may wait just for this candle to retrace. If we go to a shorter time frame, let's have a look at that dip there. So there's roughly where the 100-period moving average is. So I may wait for something like this before entering. You can see we've already turned down on this 15-minute chart from the 200 and the order block. So we may get something like that down into where that support level is, where we hedged at the 100-period moving average on that chart, and then bounce out of there and look for that long at that point. That would take another hour or so from where we're currently trading. Going back to the 4-hour chart, you'll see what I'm talking about right there. So bit of a dip. I've left the same arrow on from the 15-minute chart. So that's a dip down to the 100-period moving average, the breakout point, and my hedge level. I can then remove my hedge at break even if we get that opportunity, and it looks like it's going to reverse. Remove my hedge at break even, add a long, and then we'll be fully long on natural gas. Target for natural gas will be back up to the top of this weekend, not a weekend gap, it's a rollover gap. It's really insignificant in terms of the gap itself, but I think we're going to get back up into higher prices. My overall idea, natural gas trading between roughly $3 and $5 with extensions to $2.50 and $5.50 on rare occasions, weather dependent, and of course storage dependent. So that's natural gas. Folks, if you are a member of this YouTube channel and you've got questions about it, please ask us about this at the end once we move into the Q&A session.
Yeah, your questions
once we finish.
And we'll, any questions, we'll get to them. We're just experimenting today. Just as an example, we're actually not going out anywhere other than YouTube right now. We've still got a lot of things we need to work out on. But yeah, leave us the comments. We will get to them. So we're really excited to hear your questions and see if we can answer them. So yeah, cool.
Awesome. All right. So whilst we're on this page, and someone has already asked about WTI oil, and I'll just cover this briefly. It's not one of my main plays. My main plays, as I said, are natural gas, silver, gold, and NASDAQ. But I do have a trade on here. I've got 3 short positions, all below the 200-period moving average. The moment, and this is the day chart, the moment we broke up above the 200-period moving average, I hedged the entire lot. So I've got 3 shorts and 1 long. Not a big difference between them because that's my major short position at the 200. And so my average short trade price, I think, is around 50. I think it's above $60. I'm going to have to check, but I think it's 60.5. So it's not far below where we got hedged at 62.5. And I don't know how far this is going to go. We've got this Iran. I described it in the private group as a very carefully choreographed and staged war production movie about to start. It sounds awful, and I don't mean to be flippant about war. I hate war more than anyone else, but the way this production is setting up, it's like a movie, and it's driving the price of oil up. And it's probably all likely to be over very quickly if it happens at all. And hopefully there won't be any decent people's lives lost. And my heart goes out to all Iranians, citizens. It's the most awful thing. Right. But it has driven the price of oil up. And it could go much higher, or it could just be an oil fart and drop that back down again. I think it's more likely to be a fart. Although I'm going to allow for a move back up into the point of control over here at about $65, and we may even have to get up towards $70. I don't know, but we'll find out soon enough, because we'll find out from the daily candles, and I will be trading the daily candles, not the 4-hour candles, looking for a reversal. 4-hour candles are going to be too volatile over the rest of this week because because war, no war, fights, no fights, and these 4-hour candles get obliterated easily. A day candle is a little bit more structurally sensible. And so we'll wait for a reversal on this. Until then, I'm going to remain hedged, allowing for this to move up to wherever it wants to go. Doesn't really matter. I've got $2.50 loss locked in. It's not going to increase, and it's not going to reduce until I do something and take action, which I'm not going to do. So I'm pretty safe there. And that's oil and gas. And then the next thing I want to talk about is silver and gold. There's a Christian song that says, "Silver and gold have I none," said he. Those amongst you.
I think there's quite a lot of songs which have that. I've got a few rattling around my head now since you've been saying that. Thanks for that. I got that earworm.
Yeah, earworm. Yeah, silver and gold. But such as I have, give I unto thee, and I'll give you what I have. And that's my rather tentative advice. But I'll tell you what I've done. I've shorted gold. We did short gold earlier. We've tried it twice. Basically, I've been long on gold since the breakout of this large. This is gold. I don't know why I've got the wrong chart. There's a very large, this channel, I don't know what happened to the thing, deleted it by mistake. This large ascending triangle, we got long at the bottom. We've been long all the way up until these 2 red arrows, where I thought we could get a bit of a pullback further back into support. We didn't. So I hedged the whole lot, got long there. We took profit on the longs, and also got out of those short hedges. I've now sold at the 3.618 fib. This is a brand new position, fresh. I don't have any other positions on, and it's a very small position, 10%. I think it's 15% actually. little bit bigger than normal. But look what's happened. We're at precisely the 3.618 fib, but we have broken above the channel line, which is not good. Sometimes these channels don't really mean all that much, though, particularly this one. As you can see, it's somewhat of a channel, a little bit messy, and we've exceeded it both top and bottom on occasion prior to the breakout. This is the big breakout I was talking about. We got long right down there and long there and started shorting all the way up here. So don't say to me on X that I'm a perma bear on gold. We've been mostly long on gold until recently. So I'm not a perma bear, and I'm actually a bull on gold, but I think we've got to come back into a more sensible level. Look where the 20, the 50, the 100, 200 stacked below us are. Even a mean retracement, reversion, just to the 50 period would be a very, very large drop down to 4,900. We're currently trading at 5,275. I got long right at the top, literally at the top yesterday. We'll see how we go, and I will hedge it if it moves higher. It's a small position. Same on silver. We got short on silver a long time ago, relatively long time ago, over here. Let's have a look at the day chart. And once again, I've been long on silver all the way up until that green blob, where I got out of my longs thinking, like on gold, that we could have a retracement, a mean reversion back into some of these moving averages. We did not. And so I had to hedge my position and take profits. Sorry, that position is still hedged, actually. I have a very small position here, one long, one short. Those are miles and miles below us. They don't really matter. They're insignificant. My next position is this one here. Now, look where we got to. Let's go to the day chart or weekly chart. Let's go to the day chart. This weekly chart, this big line up here, this red line, is the 2.618 Fibonacci extension at $120. Not only is it 120, which is one of my favorite numbers, the 20s and the 80s, it's the second largest fib extension before we get into the next cluster. And I mean, look at the chart. It's literally vertical. And so it's worth a little go here, but I have a very tiny risk on this trade as well. Let's go back to the day chart, and you can see where I sold. And actually yesterday, if you were watching this, dropped all the way back down to the bottom where we, the bottom of the previous day's candle, and then bounced all the way back up again. And we could have got quite a decent profit on that short if we'd taken profit there. But it bounced out, and today's moving up a little bit. Still not above that high, and it may well get above there and above 120, the 2.618 fib. If it does that, I'll hedge it again and wait for the next Fibonacci extension level, like we did over here. Get out, hedge it, protect your account at all costs. That's the most important thing. And then wait for the next level. And actually, the next levels on silver, believe it or not, and I can get where people are calling for this, at around about $200. That's the Fibonacci cluster, similar to the one that we've just burst through. That's the longer term Fibonacci cluster, all at around $200. We're at 120 now. Not quite, almost at 120. So a long way above us, and it's not inconceivable that this could just, complete the vertical move. And it makes very little difference whether it stops here or if it just goes up to there, does it? I mean, it's just continues. I mean, it's not going to be shocking in the way it looks or the way it seems. It would seem, relatively normal, I would imagine. So just going back to the day chart, let's have a look at, is there any evidence of reversal? And as I pointed out to you, yes, a massive spike high doji. It's not a reversal candle. It's a hesitation candle. It needs to be confirmed by a close below the bottom of that candle. We've not done that. In fact, we're heading back up towards the top. So if we break above there, I will hedge this entire trade. It's only a very small one, and wait for the next opportunity, which might be at 120, which we haven't quite reached just yet. That's just a little bit above us. We got to 118 and some change. We sold at 118. So there you go. That's gold, and that's silver. I can't remember if we talked about gold. I think I did. Did we cover gold? I'm not sure. Anyway, I'm short on gold as well. Yeah, we did. We talked about the 3.618 fib. Look how far this has got. 3.618. Silver, it's at its 2.618 fib, and we've got out of the top of the channel. And I'm trying tentatively a little short here, but I will hedge the whole lot.
Yeah, I mean, it's
very quickly and very tight. Yeah.
Yeah, I mean, as a Bitcoin, I've been a little bit frustrated with the whole narrative. Of course, over the last couple of years, is Bitcoin is going to be a the digital gold, right? And there's been elements that we have, of course, seen that come to fruition. But then again, when we enter kind of chaos theory again in the middle of January, all of a sudden gold is going to the moon, silver's going to the moon, and Bitcoin's like, hello, I'm still here, right? What I take from these movements are, one, they're obviously a sign of the current turmoil with the world economies and trade wars and trade agreements, all these kind of things, which have again been upended. But what I find is very interesting is the fact that people are not seeing Bitcoin in this fashion at the moment. Now, obviously, you can look at that as a load of bearish signals, right? Just like if gold was giving you bearish signals, you wouldn't get the buyers. But I think, would it be fair to say that if you're looking to take profits in gold, you're looking for some kind of stabilization signal from the wider markets? Is that overly simplistic from a layman? What do you reckon to that?
Yeah, I think, whenever anything goes up so dramatically, there are natural constraints that prevent it from going beyond a certain point. Yeah, you did hear that fart, gold fart, beyond a certain point. And then, various things come in, liquidity becomes a problem. First of all, there's not enough to buy. Price goes up, but then there's just things come to a halt. Then there are constraints within organizations, hedge funds, banks, etc., as to how much they can risk on a certain asset and so on. They're all maxed out right now. If you look at the COT report, they're all maxed out. They can't really be buying a lot more. Some of maybe central banks can, but once again, they also have constraints. So every single market reaches a point where it's saturated with buyers, and people start sniffing around to the short side, like I am. And the more people that sniff around.
Yeah, or to pivot into a different thing. And that's the thing, is what we're going to pivot into next, right? And where do we want it to pivot to, right?
Yeah, well, we know where we want it to pivot to, but will it? A lot of people making claims on X this morning about this is it. We're pivoting out of gold, silver into Bitcoin, Ethereum, XRP, and Solana. I don't think that's as simple as that. I think gold, if you think that Bitcoin is digital gold and that's an alternative to physical gold, maybe, but I don't think it is actually that. I think it's something completely different. It's much more liquid. Yeah.
I think the problem is, right, it's obviously Bitcoin is obviously not as simplistic as what gold is, right? It's just not as simplistic. And, there's been a lot of fervor about, this doesn't really impact Bitcoin that much, right? But there's been a lot of fervor around, all of these. There's currently a lot of consultation period in the United States in terms of crypto and all that kind of stuff. But there's still the same battles being fought between, like, as an example, Ripple is advising about, we shouldn't be considering this as security because of this. And it's the same conversation we've had over the last 2 or 3 years. And it goes back to my point that the current legislation, the Clarity Act, all kind of things which are looking all very good and bullish for crypto, they're really, I said this before, they're really just kind of making sure the door opens and closes. It's not anything special which is happening. They're just trying to close loopholes, give banking and whatever clarity. But then you're faced with another single issue, which is banks don't like crypto because it's a threat to their ecosystem. And so you've got on one side, banks are all doing this. Banks are opting to their stable coins and all that kind of stuff. Sure, because of course they want a piece of it. They need exposure. Of course they do. But the reality is that it's a much more complicated picture. And you can't deny the fact that Bitcoin has had 2.5 years of an uptrend. It needs a minute, right? It needs a minute, a few months at least, to just come back in to reset. And that's part of the thing. It's not like Bitcoin isn't digital gold. It's like, it's not quite as simple as everyone's going to pile into Bitcoin if this happens, because of course, as a trader, I will be looking at the market, I will be looking at the charts, and I'll be saying, well, sure, I would like to put my money somewhere, but Bitcoin's losing all of these key levels. It's in a downtrend. I can't find a bottom. Why am I going to put it in? So that's why it's so important for Bitcoin to establish a more bullish narrative, because then people will be more likely to pivot once you've got those signals, because ultimately it's retail which wanders around the room in the dark buying things randomly, but that doesn't really shift the market that much. It's the big whales, it's the big players, and ultimately those are the ones which we want to get back on board with Bitcoin. And it's a difficult sell right now to say, well, let's take my profits from this run up from gold and throw it into Bitcoin. It's like, it doesn't make sense right now. And therefore everything's conditional. And if you look at Bitcoin in a larger scale, like going back to when it was first created, and how it's amazing gains since then and the gains to come, but there's a time and a place still to buy that asset. And that time and a place could be in 3 or 4 months' time again, right? A good buying opportunity is coming, but it's not yet. And therefore, the charts don't lie, isn't it? It's the age-old thing. The charts don't lie. So, and when gold is going up to the moon, of course, everyone chases it because everyone's talking about it, right? It's everywhere.
That's it.
Yeah.
I'll give you my thought on this chart, and then I'm going to move on to stocks, but we'll come back to this, Paul, let me just sort of touch on this. I don't want to spend too much time, but basically this is what I think from a technician point of view, not from a Bitcoiner's point of view, just from a trader's point of view, because that's what I am. I'm a Bitcoiner, but I'm a trader first. And I prefer to store my profits when I make them, if any, in Bitcoin rather than dollars. That's all. So yeah, I'm a Bitcoiner, but I'm a trader. And so when I look at this chart, I see the bear flag, this big broad orange bear flag was potentially broken. The fact that we've bounced back inside it is irrelevant. The fact is that we've destroyed the bottom of the bear flag, and it's now weak. It could be, a fatal rupture. If we look at the 1 hour chart, we've got another bear flag within the broader large bear flag, the orange one. So we've got bear flag within a bear flag. That's not great, is it? And we've now rejected from the top of the bear flag in the small bear flag. And so it's not looking good. I mean, I said this yesterday, and I've said it every day this week. It's looking awful. And we've now ruptured the lower part of this flag, and we've rejected off the top of the internal tiny green flag. And okay, none of that's good, right? And you know what that means. If this flag is indeed broken, we know where this market's going next. We have no doubt about it. If it follows a technical pattern, we know where it's going.
Let me show you this. Let me show you this chart, which I've been working on, if you don't mind. It's not finished. Let's just have a quick look for Bitcoin. I was just working on this chart before the stream. It's not finished at all, right? So this is Bitcoin monthly Bollinger Basis cross. Now, I haven't finished this. Now, the idea is that this is 2017, 2017. And this is the basis line, the Bollinger Basis line, right? And then the bear market essentially is properly triggered when we have a break of that line. Then we recover, and then this is the 2021 bull market. And then again, early 2022, we then have the break, and that's the final signal for the rest of this move down. And of course, this is the latest bull run. And again, you can see on here, it is a tremendous run up, right? It's not this because it's a huge asset class now, right? It can't do this, right? But it's been pretty good. Sure, it probably should have come up higher, but nonetheless, macroeconomic conditions. But here we are again. Look, we've got 2 candles now really struggling to maintain this basis, this Bollinger Basis level, and it looks like it's potentially going to roll over. And if it does, then we're going down. Now, I think it's nothing to be afraid of, a bear market, because it is a tremendous opportunity to stack up on Bitcoin. And it just means you have to wait a little bit more. Now, if you want to talk about the bearish scenario a little bit more detail, then check out Bitcoin update from yesterday, because we really get into the comparison between the 2022 bear market and the current 2026. But everything, I think, with Bitcoin at the moment, the fact that it's happening quite quickly is a good thing, right? Because it's going to get, let's say 49K is the floor, right? As it was in here, the weekly 200 MA here, then that's not a bad retrace. That's a really good buying opportunity. That's nothing crazy, right? We've just got a few months of bearish conditions, and we come in, but it isn't looking good. And it goes back to the fact that any proper investor isn't going to be looking necessarily is going to be looking at this with skepticism and saying, well, it's had all of this and now it's got to come down. I mean, it's just perfectly normal, right? And if we look at the I mean, this was a chart which I looked at in Bitcoin updates, right? Realized price bottom predictive, and the previous bear market essentially gave a 30% retrace once we tapped the realized price. And if that happens again, that's a 37K Bitcoin. Now, I don't think that's going to happen again, but it certainly highlights to how 49K is certainly a reasonable retrace value. And then if you look at Bitcoin today, if I can find the right chart, that's just a blank chart. That's extremely unhelpful. This is where we are, right? We are stuck in these bearish patterns, right? There's got all this resistance overhead. Bitcoin needs to come all the way up here to give any kind of significant bullish signal for people to come in on the flip side. So that would be a clear break of 90K, 91K, and then we come back down. And we're not seeing any move like that. We're seeing moves like this, which are extremely difficult to trade because they're just not giving us the bullish confirmation. So we need more data. We need more price action. Could Bitcoin come all the way up to 101K? Yeah, absolutely. But again, that could just be the last gasp. So it's a very interesting time for Bitcoin, but I don't think we should be afraid of a bear market. I mean, the beauty of modern trading is you can short anything. You can do anything you want. You can trade any direction. So like, what's the problem, right? Sure, you're not going to be accumulating, adding to your Bitcoin bag, right? You're not going to be doing that just for a few months. Oh, boo-hoo, I can't add my Bitcoin for a few months because I'm not prepared to buy it at 125K. But then we're getting closer to the point where you can re-up at almost like maybe half the price, plus the fact that we've got all of this bearish signals, which if you invert it, is just a load of bullish signals you can trade on the flip side. So the whole media landscape, which is like, it's all over for Bitcoin, I'm like, no, I'm just changing to short trades. You know what I mean? So,
all right, Paul, have you said your thing? Talhan wants to know why you're not talking, but now that you've been talking, I think that's satisfied him.
Have I satisfied you to do?
Yeah, Paul, let's just quickly switch. I'm just going to finish off my chart. If I can just switch back, how do I get back to my chart quickly? I'm just going to wrap up.
And then I'm going to start the timer for the members stream as well in a moment.
Yeah. We got to get moving. So Bitcoin, if I take the move down into this big yellow bear flag and duplicate it, that's the flagpole down. That's the target. If this flag breaks, which is busy trying to do, and by the way, I've just hedged literally this morning on the rally up to 90,000. I hedged 33% of my Bitcoin, my traded Bitcoin, not my wallet, all the other stuff, but my trades. So I hedged it on a rally, not on a dip. So the market moved in my favor, and I took a short position against my longs. People think that's nuts, right? Why would you hedge a market that's moving in the right direction? But there's a reason for it. We'll talk about that maybe on Sunday live stream. But if we do break this bear flag channel, that's the target. It's this very, very simple and well-known technical method to determine the target of a breakout from a bear flag. And the target is, in fact, $65,000. And it's also the previous consolidation zone and the point of control on this chart. That, I'm afraid, is the most likely scenario for Bitcoin in a nutshell. I think you agree with that, Paul, don't you?
Yeah.
All right. That's it. And I'm going to move on to stocks. We can come back to that and, of course, members' questions shortly. But just to say, I'm long on the NASDAQ. Yeah?
We have a 5-minute timer before we move to members. So,
okay. Is the timer up? Where can we see
it's not up, but it exists in the ether.
Okay. All right. Okay, cool. All right. So NASDAQ. I've just done a couple of things this morning, just a few hours ago, 2 hours ago. I took some profit on the S&P, and because we had two positions on here. Well, two major tranches, one from the bottom and one from these two zones at the top here. We've moved up. I took almost, I can't remember, a big profit on these two longs. We took profit at the blob, at the underside of the trend line, and the that's the 100% retracement of something. I can't remember what. All right, so we've moved up there and tagged that level, tagged the underside of the trend line and my blob, and I took some profit. I've left that position, the much lower position below the 50-period moving average. That position is still open and still long. That's the S&P. And then NASDAQ, I haven't changed. I didn't actually adjust this one. But I'm looking at what's going on here. We're approaching the all-time high here, and I've got a target for the NASDAQ set much, much higher as a result of the breakout from the symmetrical triangle, which takes us up to the top 200-period Bollinger Band area and closer to 28,000, a little bit above 28.2. And that's based on the breakout from the symmetrical triangle, the hold, and the hold above the breakout double top above the symmetrical triangle at the Fibonacci extension zone, the 786. There's the double top right in the center of the screen. Let me just quickly finish this off to make it clear. So that double top there is also at the 786 last chance fib. We fell down from that fib, got to the bottom of the channel or the triangle, and that was that, right? The last chance fib rejection should have moved down, but we bounced off the 100 and the triangle bottom, broke back out through the triangle and above the double top and held there yesterday, and we're now still long on the NASDAQ. I may even add some more longs onto this trade if we break and hold above the previous all-time high, which was set in October last year, just prior to the Bitcoin liquidation event. There was a liquidation event in all markets, not just Bitcoin, by the way. So there you go. That's all I've got to say on that stuff. And I will finish off with this. And I think I think you've got some more thoughts on crypto and, of course, members chat. I think we're just going to go straight into the members' questions. But dollar, the result, as I said at the beginning, the result of the dollar dropping down by 4% was a 4% benefit to every other asset apart from the dollar, including gold, silver, Bitcoin, crude oil, natural gas, everything else. All went up by 4%. Some went up by more than 4%, and good on them, that was up to them. But those that only went up by 4%, including Bitcoin, was not because they were doing well, it's because the dollar was doing badly. And finally, I forgot to point this out on this Bitcoin chart, and this should be the clanger or the clincher for this idea that I'm talking about. Look at the volume on Bitcoin. Since we got to that top, at the channel top, volume has been dropping off, not just slowly, but dramatically. And we had no volume over the last 3 days. Zero. Not quite zero. I'm exaggerating, obviously, but a little bit of volume. Almost
zero volume.
And
no volume.
Yeah. And a little bit of a rally.
What?
Yeah, well, a tiny little bit of volume. And a little bit of a rally, about 4%, I think, from the bottom there because of dollar weakness. So don't be putting your eggs in the Bitcoin basket too vigorously just yet. I don't think it's going to move up. I think it's going to move down, and hence the reason I hedged. And we may even have to get out of our NASDAQ and S&P trades if everything starts flopping off. Because, Paul, we have some possibility of another government shutdown in a few days' time. We've got the rates announcement coming up now, and
pretty assured, I think, following the weekend.
Assured, yeah.
And
we are a dearth of data and more chaos.
We are going to switch to members